Welcome to TradeTheMBI.com. This is John. This report is for the 16th. We'll go straight to the charts first of all, and we saw, morning started out, even the other day we had looked at the radar screens that were showing all those purple sell signals on a variety of the different indexes. Opened up, cyan was already above the green. We had already had steel below both, and so it was not a surprise that we just cascaded lower on that DOC spread, as we like to refer to it, and sure enough, nice retrace and nothing overwhelming. What I was watching though is to see whether or not the extreme histogram here would dip below the red and how we begin. So that's actually decent that it's beginning this direction, though the potential of still dipping below the red line would let us know whether or not we're getting into something that's going to break these lows. If we dip below the red there, I would expect it, and whether or not we get some deep red candles, probably not for another day or so to get a determination on that. So far we can see that we're starting the morning with a cyan candle. Whether we finish with that cyan candle is a different story. It's not set up to only show it when it closes, so it gives you an idea. Okay, I'm going to be paying more attention to today's finish for a Friday, given whether or not this is going to turn into a cyan candle and whether I should be potentially buying some calls for the Monday open like we did for the last setup here. NQ we knew was a little bit weaker. It had pivoted away. See it from the DOC right here. They pivoted away, then the steel dipped below. That happened right at the open as well, and you can see the cascade lower for the Nasdaq was pretty significant. Did make up some ground at the very end of it. Dow had already been in that. We had already seen the self-fractal here from the down hawk, which popped in there, and it had rolled over a little bit later, but needless to say that steel dipped below. We had to pivot up right at the context of intermediate point right here where they all meet together at the same little vortex, I call it. And then sure enough, it opened up with the definite breakout to the opposite side with the cyan moving higher, green lower. We were already in a red-white cell, so sure enough, boom, collapse. But in that collapse, you can see that it put in a hawk up, but it did dip below the red line. So it's going to be interesting to see if this creates a positive move. Regardless, we know that the low is going to be retested, so any pop is more likely than not going to be shortable for the YM. We didn't quite get that for the S&P, but it could catch up to it, which would make sense that USO was going to be heading lower because it was very unusual that it was continuing its higher push with the market starting to show weakness. We were expecting that to kind of give way, but that's been a very strong push to the positive side with this. We would need to see that red-white start to cave over a little bit to think that there's going to be any more downdraft to the market. And it was weird too because we had seen gold within a sell signal going forward into this, and sure enough, both decline. Kind of a rare circumstance. X, we could see that it was just not getting to, and this is where it becomes very important when you see these two lines crunch. If you don't get that green up over there, you get very little chance of a continuation breakout and usually a pretty decent decline. At least if it breaks up, yes, you can get a spider out of it where it comes back down again, but this clearly lets you know. So would I be selling puts at this particular point for next week? No. Did just fine as it's been, and this isn't going to show anything super positive. Yes, it's staying above, and likely we can get a pivot. If you get a pivot up, then you have the potential for it. You're still above red white, so it's not horrible, but that separation, you need to see it close off before you can expect it. And now you have the potential for steel to dip below. It did make a higher pivot, but it's not presenting that you're going to get anything positive. If you see the pivot up on lower price, then yeah, but of course it's worth taking that opportunity for it. So this is where you can just look at it and see, the separation here, CLF, it hadn't been improving, and we couldn't get the green to separate from here, which has been very weak interest from a buyer standpoint. Did get the little pivot there, but now if that breaks below, you're going to have a lower, and you'll also see cyan move above its previous pivot, which would be bearish again. So we would expect, maybe if we get back down towards the lows here, what is that number? 17 range. See a little bit of breakdown at that particular point might be worth the opportunity, particularly if you can get a green pivot that's higher. That would be the time to sell at the money put for the weekly option. Good opportunity to take advantage of the move there. You can definitely see it on 78. It's still a little oversold. not quite changed yet. AIG, I just kind of laugh because I tell people, you pay attention to these nice little red lines, that we would get our positive extreme retrace on AIG to take our gains, and we had the little peak up, and we were starting to reach a point where typically when that steel gets up there, it usually makes that pivot and you get lower. So we retraced that one. Now you retrace the full one. Yeah, and it finished right up there. It is starting to turn around, but you still have the cyan way down here. So any weakness there, opportunity again to turn around and sell puts. I would be looking at any opportunity that we get down near the 52 range to be selling those for some nice premium. The opportunity always presents itself at interesting times. WLT it still continued to express some weakness, had a little pivot up there with, and also the steel moving above. But look at that, separation's got to get closed off, so we would expect that to retrace itself a little bit. I was talking to a member about JCP for the close, and that we were looking at this at the 839. I was suggesting a buy, and I was cautioned that earnings were coming out, and it's really, don't worry about whether they're earnings or not. You get your crossovers with these setups. If you're worried about that, then buy the option. Then you at least know what your risk is. But to not take the trade because you're worried about that, I think is missing out on opportunities, because more often than not, you're going to get on the right side of the equation of it, and it's going to do well. Just a thought, something to keep in the back of your mind. So we can see that Power Mo 2 decided it liked that setup. No objection to it. We would have even liked it a little bit sooner as things were starting to turn around. But it would have been right about the same spot. You had the steel move above right here. That's a point to start getting ready. Then you had soft cross, but once the red crossed above the white, you actually began a pivot, and that would have gotten you in closer to right about there if you were willing to risk a little bit more, because your downside's not quite done in that setup. A little bit of a pop, and boom, got overbought pretty quick. So it's interesting to see that it overbought. What was interesting to see about this 50K was the reduction. We had a huge spread. This was a big separation over here, and it closed it out pretty quickly. So that was kind of nice. That's a great separation from red-white, but you're going to really need to see green take off more to the upside. Otherwise, you're just going to get a spider on that. We would expect this low to come back and be retested from your last dip right down here. So what is that, down to 1859? So that would be the opportunity to look for the short, knowing that you've got that target range, particularly on the 50K. So bear that one in mind. We'll go ahead and take a look at the intraday real quick. Okay, here's the 5K. It's a busy day when it doesn't fit on one chart. So from the line here to the line there, look at the extra number of candles we get, and that lets you know, just from a cursory standpoint, a high volume day. But, let me see if I can grab my rectangle tool here. Boom. You can see the separation that developed in that spread right there. And then it did a couple other little ones going in between as it started to fade before the turnaround. And when you get this kind of separations, it's worth noting. I mean, when you came to it right here, was the question whether or not this was going to survive. We already knew it was in deep red, so we weren't expecting it to. And I took this opportunity to really go in strong for a short, expecting the low to be broken. And in fact, that's exactly what happened. And even catching the regular short, a little bit more modest, because at the beginning of it wasn't as clean, and then it just became an opportunity. It's like, oh yes, and that you're going to get that extra bonus from it. And the point being was, as we were talking about, some people get a little frightened thinking about shorting at a low. And there are some lows that you definitely don't want to short, and in particular, that would be one like this one coming down here, where you're at a higher extreme, so you expect the pop to be a little bit longer. But once it gets overbought, there you go, you have it, and then boom, it broke again. And that one was interesting because it came back up, but you made lower pivots. And that's what I always look for. Okay, prices reaching the same highs, but am I matching those highs with my reading? No, it was clearly lower. And then it was just a moment before that cascaded and then dipped down again. Did the exact same thing with the higher. And that was an opportunity to think about long setups. And it just kept escalating higher with higher pivots from the previous one. I'm like, okay. And that lasted all the way till right about over here. But then it produced a couple of more. And if we slide across, I mean, they weren't dramatic up moves, but it doesn't look like a lot, but it was still a significant number of points for some of these, 62 to 67 range. And I think we went as high as, 60, almost 69 right there. So there were plenty of opportunities, both long and short, to trade this one from an intraday standpoint. We can see that still within a little bit of a short configuration, but put in a buy here with the pivot up, steel going above the cyan. And you can see even within the little decline that was going here, much better off your extreme histogram, no dips below the red line. So no necessity. It was interesting to get overbought right about there, which was right at the peak 68.50, the high 69.75. So even someone who shorts something like that, you get plenty of room and plenty of opportunities to cover yourself. I mean, in this particular case, all the way down to 64.5. So a lot of range. And so this is where I tell people, it's like, you can have a long or a short bias and do fine within the market. The ones who do even better are just more flexible with going either direction. But certainly having a bias isn't going to hurt you per se. The readings definitely give you the opportunity, though, to know when it's less likely that you're going to get the outcome you want versus more likely. And I just like you to remain flexible when you see those and just say, okay, I'm willing to roll with what the market does. But if you're not, then just acknowledge that and go with the setups that work best for you. Because we certainly have outlined which ones are, the best ideas, and you can see them develop time and time again, and it just becomes routine after a while of looking at the indicators when you get that. We'll take a look at the radar screen as well as some of the alert stocks now. All right, radar screen, and we will scroll through. A lot of interesting moves on some of the radar stocks. We've been looking at a lot of them been pretty weak for some time. A few of them look like they may be bottoming out, so we'll have to pay attention to that. But you can see how the other day we were looking at a lot of green with a lot of new pink signals popping in, and boy, did those pink signals for the cells work, particularly those 3-cell ones when they come in. And look out. A lot of red now, and we all know that when you go too much one direction, usually you get a little bit of a reprieve back the other way. So that's all of those. We can pop up an alert chart here. So Apple, interesting setup here. You'd gotten out of the safety zone the other day, and then the cyan started moving up. Intraday didn't look that great. We know we have positive extremes to retrace, so did we get all the way to the low? This one, 87. It was low 88, so no, a little bit left on that. It's close enough. Some of these other ones that still exist that are back over here. Unfortunately for Apple, that cyan move with now, if this red rolls over, you have lower red peaks along with the green going below. Could be problematic if the cyan continues to rise. You need to see the cyan move above that 7.5 range right here where we had the last pivot. That would be a clear indication that there's going to be more trouble. And I would suspect if we see more trouble from Apple, you'll probably have that impact throughout the market as well. So safety zone with the steel at this particular point, that looks to be helpful, but certainly want to be watching that from the intraday standpoint, because it looks like it's about to be a volatile setup, because it has gotten into pretty extreme overbought there, and now you make lower peaks. I would be jumping for joy if it were at the full highs and you started to see this kind of reading. That would be a clear indication to short the heck out of it. But as it is, it's still not a bad situation on as short as it is. Now we could see that Amazon had put in the red, and sure enough, with that red, we expected to come back and retrace below that low. It did exactly that. It's pretty straightforward. Google, likewise, that spread continued, increased again. We had the steel caving, and it did exactly the same thing. Came back down, took out all that range, and red cross below, as well as the green still staying above and actually made a higher pivot. So I would expect this should be able to turn around, given the right intraday readings. So I'd be looking at the Google if you get a nice long signal. Nothing wrong with taking that one. Netflix, despite the up move, that separation has been pretty ugly. This is not a positive chart setup, and now you've made consecutive lower ones. Well, we've looked at these three. We were wondering whether it was going to be divergent. You're also in the middle of a death zone right there, but it's holding up pretty well given that that's not a pretty signal. And PCLN, we had talked about that the potential of it coming down to retrace this last little dip over here. It had flipped over at that particular point and a little teeny pop, but we can see that it really wasn't producing anything. And now you've got a lower pivot from the green. Still doesn't look like a buy in that particular case, so I'd still be looking for shorting any pop opportunities. So whenever you get those sell signals, jump on them. And it's been pretty consistent for about the last 150 points. It's funny to say that, but it's true. Tesla, again, the big separation. It's gone all the way back from over here. So it continues to follow that. You do have the green above the red now. Red's still below the white. It's going to happen a crossover if there is one. It's going to be in the death zone. The lower lower cyan's been helping. The steel pivot, not so great. And if the cyan starts to move back to the upside and you get a separation from those, then I would expect it to trail lower. For now, it's probably just going to bounce around a little bit. I know I had not been a big fan of Twitter. As soon as it popped in with these setups, we expected it to come down and retrace the low of 32.40 once that first red. Did we get down there? Oh, yeah, we did, of course. Why not? Will it come down all the way to this red at 29.50 range? This is not looking as horrible. You have the cyan coming lower, green rising, a little bit of weakness from your steel. Looks to me like it might hold up a little bit. You've actually got improved extreme histograms. So not as horrible, but does it look like it's going to skyrocket at that particular point? No, not yet. Baidu. That's not pretty. Faz. Same likewise ugly once we saw the separation and you couldn't get the crossover. That's usually a point that's letting you know that the long guys that have covered this, the shorts that were, soft on it when it was down here, once this starts to peak up, the shorts were adding in strong at this particular point, and then they execute that move, and it was beautiful. Just beautiful. Love to see it when it takes place just like that. And Facebook, ugly. Still, that green could never get over there, and there's just no interest whatsoever. And once the steel gave up, that was the death nail because you just don't have any buyers. And even modest increase, there really wasn't a lot of active shorting on that. It just was no buyers. And shorts get a little bit interested later on, and then that's what usually fuels your turnaround when it takes place. So sometimes even the professional shorts get a little bit late sometimes to these moves. They just wait to make sure that there's been an exhaustion of buyers. It's the general scope of things. As always, look for me on private Twitter feed, Stock Twits. Trade well.